Ever stared at a TradingView chart, eyes glazed over by numbers and lines, and wondered, just how much money am I actually risking with one of these lots everyone keeps talking about? You're not alone. It's a question that trips up tons of new and even some seasoned traders. Understanding lot sizes is absolutely crucial for managing your risk and making informed decisions, so let's break it down in plain English. Now, the tricky thing is, the answer isn't a simple dollar amount. A lot isn't a universal, one-size-fits-all unit across all financial instruments. Think of it like asking, how big is a serving? Well, a serving of rice is different from a serving of steak, right? Same idea here. In the world of Forex, which is probably where you hear lot thrown around the most, a standard lot traditionally represents 100,000 units of the base currency. So, if you're trading euro to US dollar, one standard lot controls 100,000 euros. That sounds like a huge chunk of change, and it is. That's why most retail traders don't actually trade standard lots. Instead, you'll often encounter mini lots, which are 1/10 of a standard lot, or 10,000 units of the base currency. Then there are micro lots, which are 1/100th of a standard lot, or 1,000 units. Some brokers even offer nano lots, representing just 100 units. Why all these different sizes? It's all about leverage and risk management. Leverage is like borrowing money from your broker to control a larger position. While it can amplify your profits, it also magnifies your losses. By trading smaller lot sizes, especially when you're starting out or have a smaller account, you can control your risk exposure much more effectively. A smaller price movement will have a smaller impact on your account balance. Now, let's switch gears a bit. If you're trading stocks on TradingView, the concept of a lot is usually different. Typically, one lot in the stock market refers to 100 shares of a particular company. However, this isn't always the case, and some brokers might allow you to trade fractional shares, meaning you can buy or sell less than a full lot. Always check with your specific broker's terms and conditions for how they define lot sizes for stocks. When it comes to cryptocurrencies on TradingView, the idea of a lot is less standardized. You will usually trade in terms of the base cryptocurrency itself. For example, you might buy or sell 0.1 Bitcoin or 5 Ethereum. TradingView will display the quantity you're dealing with directly, rather than using the term lot in a fixed unit sense. So, how do you figure out the actual dollar value of a lot in your specific trade on TradingView? You need to consider a few key factors: the instrument you're trading, the lot size you've selected, standard, mini, micro, or a specific number of shares or crypto units, and the current price of that instrument. For Forex, if you're trading one mini lot, 10,000 euros, of euro to US dollar at an exchange rate of 1.10, the notional value of your position is approximately $11,000, 10,000 euros * 1 US dollar and 10 cents per euro. Remember, though, you're not putting up the entire $11,000. Your margin requirement, determined by your broker's leverage, will be a fraction of this. For stocks, if you buy one lot, 100 shares, of a company trading at $50 per share, the value of your position is $5,000. For cryptocurrencies, if you buy 0.5 Bitcoin at a price of $40,000 per Bitcoin, the value of your position is $20,000. TradingView itself doesn't automatically tell you the exact dollar value of a lot because it depends on these dynamic factors and your broker's specific definitions. However, it provides all the necessary information, the instrument, the quantity you're trading, and the current price, for you to easily calculate it. Pay close attention to the order ticket before you execute any trade to understand the size and potential risk involved. Understanding lot sizes empowers you to trade responsibly and protect your capital. With that said, thanks for watching, and until next time.